Yes, I'm going to just put a recording for recording, and then we'll start. Okay, perfect. So Jeremy. Okay, Max, Mick, Sergey. Oh, Sergey, nice to see you. Long time no see. Right.
Sure. I don't know when I last time joined you. It was probably still in Sydney 3 years ago.
Yes, I remember. We just spoke. Unfortunately, I didn't have a chance to look at those IPO yet, but I definitely will have a look at them.
That's fine.
Just share screen. And I think it's this one. Okay, guys, can you see slides?
Yes.
Yes.
All right, I can turn on the TV as well, or TV, the video. Seconds. I haven't shaved myself today. And that you can see just, I'm using a different monitor today, so hopefully. All right. Okay, perfect. So today we're going to cover the industry which we already looked at this year earlier. It's called Aerospace and Defense, but at that time we analyzed different company. And actually, I wanted even at that time analyze Lockheed Martin, but when I was preparing my kind of material for that company, for this kind of company at that time, I discovered that another company was a much better kind of chance to invest for us. So, and both those companies, this one and that company, grew after that master class quite a lot. But at the moment, Lockheed Martin dropped down in price. And it's again the good opportunity to allocate capital into this company. Like, I mean, not right now, but yeah, in the nearest future. So guys, just put the ticker that you understand that it is an educational webcast. And before you make any decision, you have to kind of weigh your choices and to know what are you doing, right? So where is our chat? Okay, chat's here. I can see, so everyone can see the chat, right? Okay, perfect. Okay, guys, let's start. All right, so plan for today is always, we're going to look at the current market situation. Then we're going to look at pros and cons of investing in aerospace defense industry, and then analyze the Lockheed Martin. The ticker is LMT. And after that, we're going to look at different strategies. But based on what's happening on the market right now, I presume you see that there are quite unknown right now things happening there. So I presume you enjoyed it last time. I see messages going through our chat. And I haven't seen what is happening right now in the Asian market. So did it go up or down? I probably looked at this a few hours ago, and 10 cents was down, BABA was down, slightly down, but I'm not sure, was it a reflection of last night in the United States, or is it a new continuation of that drop which happened last night? All right, I presume you enjoyed, I mean, you enjoyed if you didn't enter positions earlier last week, that drop. But basically that's what we can see. Now this is a Dow Jones Industrial Average. Remember that it is the 30 biggest by capitalization companies in the United States. And as you can see, this high, it was last March, February, before the drop in March, right? And remember it was a 37% drop. And this kind of trend, which is long-term trend, this trend is going on from 2009, right? So this one, right? And as you can see, even though we had such a huge drop, it just slightly went below the trend, and then we quickly recovered. Then we reached the top of the trend, we broke through, and we achieved new highs, okay, for that particular trend. Interesting enough that if you take the whole amplitude of this new green trend, which I put, you can see that after we bounced, we kind of going in a fast line on the top. So if we break it into two halves, and majority of time, this uptrend was at the second level. And as you can see that starting from June of this year, I'd say we're still on uptrend, but it's more like sideways trade as well. So the slope is much lower than it was before. Okay, we can see that it's slowing down, right? And if we go for closer look, we can see this is a new slope, and we've made a few rolls. It probably wouldn't be considered as a roll, but 1, 2, 3 rolls, and you can see that last night, if we rely on that particular trend, we actually broke through this bottom blue line, support line. Okay, so and you can see that if you compare this particular candle and this particular candle, they're very, very similar. So exactly the same size, and we see a small tail. This one tail is a bit bigger, and we actually reached with that tail during the day this support, which was actually, I can see it here, but from last year, we can see it several times. We touched this level 1, 2, 3, broke here, practically reached 5th time here, and now again. So that's why I wasn't surprised to see that we touched that level and bounce back. Now those levels are not that strong. So if you like analyze technically the stocks, you probably know if you see a couple times, if you see only once that touched and bounced back, it's a weak level. So if you see it a couple times, it's already stronger level. If you see that the stock or any particular asset bounce back down or up from the same level several times, it becomes a stronger level. It means that there are a lot of buyers or sellers in certain particular areas, and you have to pay attention to those levels higher. So at the moment, if we continue this slide down, which most likely we do, because we don't see the results of the decision of RS, which is making today and tomorrow, and most likely we can see the continuation of dropping down. So right where we're going to see the end, nobody knows, because all those levels are very weak. Okay, so here it's only one time, here is only one time, here is only once, here is only once. All right, so that's why be prepared that it can go down low, so it will give us more opportunities to buy shares at a better price in this particular case. But if you already have shares, probably make sure that those shares are good. Maybe if you're not confident with your portfolio, so maybe try to sell some of those shares, and after that you can buy them at the cheaper prices. Okay, so but don't be paralyzed. And if we look at this is also daily chart, and that's what was happening for the last month or so. We can see that Dow Jones, it's actually reached the highest point around 16th of August. And after that, we had this few-day drop, then we recovered, but it didn't recover at a higher level. So it was a lower high. So that's why we could start drawing the downtrend. So that's why I connected these two dots and then put a parallel line. And that's what I draw. And we can see that we bounced it here. We bounced a few times here, and last night we broke through. Okay, and that's where we are right now. So definitely this downtrend is broken. Now probably we have to redraw it, but this is how it looks at this particular moment. Now on a daily chart, we can see that indicators are in oversold position, but not turning yet. Okay, at least MACD and RSI definitely not turning yet. Stochastic, we can see already the small V, here, but not here, definitely. So easily we can see it's continuing to go down. So be careful. It can bounce as this one, but at the same time, it can continue to go down. All right, Standard & Poor looks very, very kind of similar in the sense of long-term growth, but recent performance is a bit different. We can see that that's what happened from 2020. This is the lowest drop, and then it's uptrend. I presume we've done it from 2,189 and 4,300. So it's nearly, maximum was 4,500. So it's nearly 100% growth within 1.5 years. Okay, so which is fantastic for the index. Again, we can see that if we take this green trend, so after short period of sideways trend here, we moved to the top part of the trend and we're moving up there, then a bit bounced down, then again up. And for the last, May, June, July, August, we're in the bottom part of this uptrend. And again, last night we broke through, even not last night, on Friday, we broke through, and now we're going down. At the moment, we already broke through this level of existence. So probably we're going to go lower. But if you compare it with Dow Jones had already lower. So whereas this high is the highest point, and now we can see sliding down. So it's a bit different pattern than Dow Jones Standard Poor has. Remember that they have different companies included in this index. Okay, some of them exactly the same, but some of them different. You can see that this we broke through. So now it's interesting to see what is going to happen. Will it reach this level, this level? Again, all these levels are very, very weak and they're not strong. All right, Nasdaq. Nasdaq is a different player. It's still an uptrend. We still had a huge move on Friday or on Monday. Okay, drop down, but still. Just a second. Somebody is trying to get in. There's some typing. Just a second. Okay, Michael is approaching. So this is still in the top part of this uptrend, and we can see it can move from up and down. So easily it can reach the bottom level, but it's still going to be an uptrend. Also, indicators are in oversold situation, but not turning yet. So, okay, still show us that it can go down low. Okay, this is Nasdaq. Remember, Nasdaq is a 100 cap stocks. Okay, tech stocks. Okay, technological ones. And you can see VIX instantly jumped up, but still didn't reach level of 30 or 35, 40 where we were before last year. Okay, so definitely we can go higher. So the fear on the market is like there, and if people are scared, so most likely we will see VIX is going up. As I already told you before, I tried to trade VIX and I wasn't that much successful. So I've done a few profitable trades, but then one trade went sour because I couldn't roll a put, which is really weird because the further put was less in price than the existing put. Okay, so this is how the index trading works sometimes. Interesting enough that for the last couple master classes, what I've noticed that P ratio, remember that last year when we looked at P ratio was very, very high for indexes. And at the moment, P ratio goes down. Even though the price goes up, P ratio goes down. So it tells us that the speed of company earnings growth is faster than the share price growth, which is not that often happens, because if we'll go to 2020, we saw a different situation where the price of the stocks was going much faster than the earnings. That's why P ratio went from 18 like for indexes to nearly 40 to some of them, right? So, and at the moment we can see the different situation. So last year at the same time, exactly 12 months ago, P ratio for Dow Jones was 26, now it's 23, so it's lower, but the price of the index is higher. Okay, so it means that the earnings of the companies included in that index, they grew during the last year. Now, if we look at the Nasdaq is about the same, 36, and Standard & Poor is 31, and it was 36. So same as Dow Jones, it's dropped in this. And even we see in the trend that the price of the index is much higher, but the PE is low. It means that the companies included in that particular index, they improve their earnings. All right, this is an interesting thing to notice because a lot of like analytics, they expected that the indexes will fall in price because they are quite overvalued. But some other investors, like from ARK Investment, what's this woman, Kathy Wood? Yeah, she was telling that the profitability of the company is growing much faster than the price growth, so they will catch up. So, and that's exactly what we can see right now. And this is what kind of P/E ratio was in March 2021. Dow Jones was 33, and previous year was 15. So that's how low it was in 2020. And Nasdaq was 22, and 18 Standard & Poor was in 2020. Okay, so guys, we can see that we're still quite pricey compared to what we were 2 years ago. But again, if the earnings start to improving in the same speed as now, so probably we'll catch up if index not growing as fast as the income. All right. So this is about the markets. And I don't know, guys, what do you expect? What is going to happen? I presume you know the reason, the major reason. Like there are two triggers, at least in the media, what they're saying. First of all, is Chinese, one of the biggest development companies. Okay, so they're in the urge of failing their obligation to the investors, and it's created kind of a fear that something bad can happen and the whole industry will collapse and it will affect the stock market. It's one thing, but it's more related to Chinese company. And on the American market, it's the fact that they're at the moment discussing what to do with the monetary policies in the future. Again, the decision is not made, and a lot of speculation about it. It creates uncertainties on the market, and that's why we see this drop. Okay, so it's nothing to do with any specific companies. All right, tonight we're going to look at the company which is resistant to any of these changes. It doesn't really matter if development market collapses or if something happens with the monetary policies. The company which we're going to discuss today, in my opinion, is going to handle all of these troubles. All right, guys. So put from 0 to 10 how we are clear on that situation. And if you have anything to comment, just comment, just ask the question. Okay, so. All right, let's have a look at the aerospace and defense industry. We already looked at this industry earlier, but still want to repeat it. Now, first of all, some of the companies included in this particular industry, they are located here by value line. But if you go to Finviz, if you go to Morningstar, if you go to other platforms, you might find those companies in different industries, because sometimes it's very difficult to allocate the company in one particular industry, because they produce so many different products and services that some of them, it could be IT services, some of them could be logistic, some of them would be marine, and another would be aerospace and defense. Okay, so where you're going to allocate that specific company. So value line put our company, which we're going to discuss today, so to aerospace and defense, because majority of their business is made in that area. Okay, and they also considered to be one of the biggest contractors for governments, not only US government, but other governments as well. If you go back to slides which we saw in March, there were 49 companies at that time in this industry, but at the moment in value line already 52 companies. So they added 3 more companies. to this particular industry. Now, what they do, they design, develop, and manufacture commercial, private, and military aircrafts, even though it's a defense industry, but still they have a huge business outside of military area, right? So they also produce private jets and private IT technology and all these kind of areas. Also, they work for advanced space systems and ground defense products such as missile defense systems, vehicle for businesses and government around the globe. Now, advantage for companies with deep government relationships, 100%, because especially during tough times, companies with a constant kind of supply of money, cash from government, for them it's easier to survive, right? For compared to the companies which don't have that cash inflow from government. And also, if we try to understand the reason for this company weak performance from price performance, because first of all, COVID affected aerospace definitely, and a lot of companies like in commercial space and private space, they stopped flying completely. All right, and if you go for some like travel industries, for example, or delivery industries, logistic, they suffered quite a lot. And of course, the mileage which was done by airplanes within last 2 years, it was much lower than before. And as a result, demand for new planes also was reduced. That's why companies like Boeing, they were affected quite a lot. And because it's exactly the same industry, aerospace industry, a lot of people, they just try to exit anything. Because remember, guys, we already invest quite a lot of time, but you still know, probably when you meet people, you know that not so many people analyze financial statements and analyze companies in details like we do, okay? And I'm quite surprised about that, but I see sometimes even hedge fund managers, people who invest in hedge funds, so they invest somebody's money, they still don't do it. They just trade based on technical analysis, which is really, really surprising for me. All right, so this is one of the reasons why the price was dropping, but also another reason, because when the government was changed, when Biden came into the force, a lot of investors believe that they might tighten the budget, like military budget, and the companies like will suffer in their sales because it will be reduced. And it's partially true. And really, some of the companies in defense industry, based on value line report, they were affected, and government pulled back their funding to those companies, but not to the companies which we analyzed. And the companies which we analyzed last time and which we analyzed this night, they actually have a very good relationship, but also they have a very strong product which is in big demand. Okay, and we're going to talk about it a bit in a few slides further. All right, so this is major reasons for the drop for that particular companies. All right, and we're going to look at that specific company, why it's also dropped. There is a third reason as well. Now, as you can see, a value line improved the rank. Before it was 51 in March, now it's 30. So value line put this at a higher level already. It's not the perfect rank which we are trying to find with 25 or above, but still 30 is already one of the best, right, out of the whole universe. Now, if you look at the size of LMT, it's pretty good, big company, and in 2014, I think it was counted as the biggest company in the world, not only in the United States. Now, last time we analyzed an OC, and you can see it's a smaller company than LMT. Okay, and this is boy. All right, so that's how I come up with this company. Of course, I had it already in my list, but I checked it in anyway. I went to value line and inserted only 4 parameters. First is industry, 52 companies. After that, I put the earnings per share growth above 5%, and as you can see, it's only 16 companies left. Then I added projected 5% growth or above, and it's only 13 companies left. And after I put PE ratio less than 15, only 3 companies left. Okay. During March masterclass, we had much more companies when I did exactly the same screen. So this time only 3 left. One of them is Huntingdon Inglass Industries, okay, HII, Lockheed Martin, and Northrop Grumman Corp Holding, which we analyzed last time. Okay, and if you can see that their growth rate is much higher than 5%, so it's 17, 15, 12, and 20. Okay, and projected growth is around 7%, so all the same. Okay, in P ratio, we can see that actually the lowest P ratio is Huntington Inglass. Okay, it's 11, and Northrop. So they seems like even less in price than LMT right now. So, but we're going to look a bit further, and I'll explain why I chose still LMT, not other 2 companies. After that, I copied them to FinViews because it's easier to see and all in one place. And you can see straight away that, like, remember that sometimes they have different P ratios, so as here. So HII has P ratio 10 and forward P ratio 13. When we see that forward P ratio is higher than the current P ratio, it means that they expect the earnings drop down, and it seems like around 30%, right? Drop down in earnings next year, the projected. So if we look at LMT, the P ratio is less, so they expect a growth. And when we looked at NOC, also the P ratio is higher, so they expect again a slight drop in price. So that's why I don't discharge those companies from my portfolio, future portfolio, but definitely I would probably pay attention to them, because if there are some changes in their earnings in the future, it will affect the price. Like, I mean, you guys, you know, when the company reduce their earnings, when actual time comes and they announce it in Seeking Alpha or Yahoo Finance or Nasdaq and all these platforms at the same time, that's where the price goes down. And you can see that HII, it's like a triangle here, and it just broke through this triangle. There is no level where, like, there is this level exists, but still it's easily can drop down low. So based on that, so probably same as this size. So from 222 here, it's about 100, so $20 more. So easily can reach this level, $180. Wouldn't be surprised, or maybe even lower. Now, NOC, you can see that's where we had masterclass at those levels somewhere in March. And you can see both companies, they moved up quite a lot from that point. And LMT, it dropped down back to the same level. The price was, I think it was 349 or 346 when we had a masterclass, right? And now it's practically the same opportunities before. Now we can see that NOC have done few rolls on the downtrend at the moment at support. So if it breaks through and goes down to same levels, I would be more than happy to buy the company indeed. Okay, so I would be happy. Actually, I bought both those companies at that time, but I sold them pretty quickly because it's achieved my level, and then it moved away. So I had a chance only once to trade for each of these companies. At the moment, I'm looking for entry opportunity for LMT, and if NOC drops down more, so definitely going to be one of the companies which I'm going to look at, because fundamentally, really strong company. Okay, let's have a look at Lockheed Martin. What they do? So it's an American aerospace, armed defense, information security, and technology company with worldwide interest. They actually have a branch here in Australia. At least that's what I saw, because when I was typing Lockheed Martin, it's come up .com.au as well. So which is maybe it's a copycat, maybe it's another company, but at least I saw it. They have presence in Europe, they have presence in United States, but definitely I presume they're more like a sales presence, not a manufacturing facility area. So it's founded by merger in 1995 as a new company. Lockheed Martin existed before, but then Lockheed existed, and then another company with name Martin existed, and then they joined together, and that's how it come up Lockheed Martin. And at the moment, they work with 4 major areas. If you go to their reports, it would be aeronautics, missiles and fire control, MFC, rotary mission systems, RMC, RMS, and space. Okay, and as I said, 2014, it was world's largest defense contractor by revenue worldwide, right? So, and oh, sorry for my Russian language. Here I didn't read that. And so the reduction in price was, we already discussed it. First of all, fear about the COVID, and generally that the air industry lost quite a lot in revenue, and because this company has some kind of relation to aerospace, because it's also manufactures planes, but because it's military and government pays for this, so it wasn't affected as other companies producing and manufacturing planes. Then investors concerned about, again, government reduction in buying these planes, but it's not related to Lockheed. Lockheed has different fighters, and one of them is, I think, F-35. I presume it's this one or this one. When I was looking for pictures, it's one of them. And based on what I read, they secure payment for following 10 years, right? So they have payments for this particular plane, so, and their support, right? So maintenance, etc. So they have a lot of income coming just for that type of flight. And also one of the reasons for the drop as well, when I was reading different articles about last report, it seems like they had a loss, 60-something million dollars. So compared to that huge company, it's not that big of the deal, but still the major reason, because they couldn't explain it. In the sense that they said, yes, we have a loss, but we cannot tell you why, because it's related to the project, which we cannot tell you, because it's a military project, it's a secret project, and they have no authority to disclose it to investors, right? And people didn't like it, and that was one of the also like reasons for price drop. Okay, so at least it's in my belief again. Now, what I did, I went to their website and I looked at their last report. Why I did look at last report? Because during that last report was like we could see the price kept going down. So I thought maybe it was something bad during that report. But look, their projection, the earnings come up better than like last year. But also the projection, look, if we look sales outlook for 2021 prior, it was 67,300,000,000, and it was exactly the same during that quarter. So they didn't change it, they didn't reduce it. So a lot of companies drop in price, their shares drop in price because they changed the outlook. Here it wasn't changed, so it wasn't the reason for the drop. Now, if you look at profit, so exactly the same. So again, they didn't change the profitability for the whole company. And the only difference in changes, it was earned income per share, and they actually increased it by 30 cents. It seems like they increased the level of amount of money which they're going to allocate in order to buy back the shares from the market, and as a result, they increased the profitability of shares by 30 cents. Okay, because I mean, if the sales level is exactly the same, if the profit of the whole company is exactly the same, so the question is, well, what the heck, how they can do the increase in share, right, income? So definitely by buying shares from the market. That's the only way to do that. All right, let's have a look at the value line report. And first of all, let's have a look straight away. Timeliness is 3, so it's average. Safety is 1. So value line considers that this company is one of the best. Beta volatility is similar to the market, 1. Although when you see, like, technically, the company can move quite a lot during the year. All right. Now, their projection for next following 18 months is it can go from 277 to 578. So it's quite a huge move. It's nearly 100%. So that's how value line like plays the future. So it's practically tell we don't know where it's going to be. It can be 100, not 100, what about $70 down, or it can go nearly $230 up. Right, so it's practically very unpredictable at the moment to say. But in the long term, they expect the company still grow, and the growth rate is from 7 to 12% in price. Okay, not the earnings itself, but the price. Now let's have a look what was happening with this company during last, at least let's look at this 15 years. Was it growing, stable growth or not stable growth? And that's what we can see. One of the important periods I'm going to pay attention to is the 2008 and 9, like where the crisis was, because if we see how company performed during that tough time, so we can expect the same thing from the future. Now, from 2005, okay, $86 in revenue, 94, 102, 108, 121, 132. So we can see that the company actually every year for the last, what, 15, 16 years, I don't know just the information before that, never stopped growing. So every year their revenue increased. It gives us, especially during that tough time, so it gives us a very, very good outlook to this particular company. So even though if something happens right now with the economy, we can expect that this company, if they keep going in the same way as they did before, so pretty like stable. Let's have a look what happened with earnings, because earnings are more important. Now the third line, 380, 530, 680, 780, 778. So it's 2008. It's the crisis where everything collapsed. A lot of companies went into liquidation. So this company reduced their earnings from 786 to 778. So it's like 8 cents. So it's less than around 1% in earnings. Next year they had another drop in earnings. Okay, it's from 770 to 723. So it's another 55 cents, which is less than 10%. Okay, and after that we can see that the company started growing back up. In 2011 they achieved same earnings in 2008, and then 9, 11, 11, 20, 11, 40, 12, 13, 17, 21, 24, 26. So they are planned projections to make $33 in 3 to 5 years time. So guys, when I see something like that for in company performance, I really love it. I really, really love it because I not only see the stability, but I also see a consistent growth, right? And also the major point also it's that they're kind of stable during the crisis times. So it could be as a protective asset used. So we already analyzed few companies which can be used as a protective assets. And during the difficult time, we can buy them, even though they will drop in price. Everything drops in price. So, but as a business, they will survive. Okay, this is the most important. Now let's have a look at the book value. Book value, it seems like growing, but in reality, when I looked in Interactive Broker, it's intangible book value. So it's altogether book value, but when you look at the tangible book value, it's actually negative. This company, I presume they have a lot of patents, licensing, and they probably will buy some other companies. So that's why they have a lot of intangibles, okay? So if this company goes into liquidations, we won't get anything. The question is, are they going to go into liquidations or not? If the major reason for a lot of companies go into liquidation is the debt level, so let's have a look at this one. So they have $12 billion in debt. Capitalization is 99 billion. So now it's a bit less because the price dropped. When the value line report come up 3rd of September, the price was $357. Now it's $338. So it's a bit less. Okay, so capitalization probably around maybe 90 billion now, but still it's around 15% from the capitalization. It's one thing, so it's not that big. But also let's go look at net profit. Net profit right now It's last year it was $6.8 billion, and this year they're already planning $7.4 billion. So actually, if they want to pay all their debt, so they need to use only 2-year earnings. So it's not that significant of the deal. But also, if we go for the next slide, and we'll see their cash position. So if we look at their current assets, okay, it's total assets at 20,674 million, and if we look at liabilities, it's 15 billion. So they have a surplus of $5 billion, more than $5.4 billion. Okay, so if they decide to pay, so they can probably easily pay with a couple of years all this debt if they want to. But I don't think they intend to do that because debt is so low right now. Okay, it's probably zero interest. Okay, it's much better to reinvest it if they have different projects to do that. Okay, and they definitely do, because look at their return on total capital, it's 40%. Okay, so return on share equity, because share equity is kind of negative, so that's why it's non-manusful finger, because it's reversed. Probably they are looking here at the tangible book value, so it's negative, and so that's why it's such a number. All right, margin is their margin here. Net margin is 10%, net profit margin, net operating margin is 15%. So it's actually growing, which is pretty good, right? So it's a good sign when we can see that the margin are growing. Okay, and another thing probably here I want to pay attention is the common shares outstanding. We can see that here it was 314 probably millions of shares, right? 303, 289, 280. So we can see that they're buying back, constantly buying back shares, and that's how they achieve increase in earnings per share without adding additional increase in like in general is for the company, right? Changes. So that's why it's a good thing for us as well. Okay, for this particular company. Now on that particular part, probably it's, and also they pay dividend. It's 3% dividend. And also another thing also important for us is at the moment PE ratio is 13. I presume because it's dropped in price, it's around 12.5 now. Okay, PE ratio. If we look at their last earnings and then divide by current price, not the price which is on the report, so it would be 12.5. If we look at average PE ratio, it would be 15.5, 15.9, 18, 21, 19, 17. So we can see at the moment it has PE ratio which is the lowest than, and like it was in 2013, and those years it was that low. Okay, so which is pretty attractive, right, from that point of view. The growth rate, annual growth rate. So what we can see here, sales will grow in 6%, pretty stable. Look at this last year, 10 years, 6%, 5 years, also 10%. Earnings, if we take the average 10 years, it's 9%. The last 5 years, 12%. So for the last 5 years, they improved their growth rate. Although if we look at the future, their projection a bit lower, okay, 6 and 7.5. But sometimes I wonder if I download the reports from 5 years, what kind of projections they would have in that report, because some companies they're conservative. And if we go to Estimize, I'm going to show you in majority of cases, they have produced better results than they expected. Okay, and you can see all quarters and all sales, earnings, dividends, everything is positive, which is fantastic. Now, value line, he explains practically what I already told you. So the prices slipped the day of the earnings release, and since that the equity has underperformed. Okay, but as a result, what they see, we are recommending the stock. The issue has underperformed the broader market of the late, and its valuation is appealing. According to our 18 months and 3 to 5 year target price range, meaningful appreciation potential is forthcoming. So it's young gambler. Okay, and you can see the stock price stability 90, company financial straight A++, price growth persistent 95%, earnings predictability 95%, which is pretty good and successful. So here, once again, you can read what they're doing. Lockheed Martin provides a broad range of products and services toward governments and commercial customers. Area of concentration includes space and missile systems, electronics, and aeronautics. Program base include F-16, F-22, F-35 aircraft, ballistic and anti-missile systems. Okay, C-130 transport and Titan launch vehicles. All right, so it's pretty kind of military oriented products. All right, guys, you already saw it, but still I want to ask you, usually I do, what do you think is quality company, undervalued company? If you put kind of what do you think about it in chat? So it's nice to see. So based on what you saw right now, I always encourage to read more about the companies before you put any money in it. But already based on what you see, you can make certain impression. Okay, good quality. What about the valuation? What do you think? Is it a low valuation? Like, I mean, undervalued, overvalued? So GAIS feels undervalued. Yeah. Now we always have to understand that there is a fundamental view of valuation and technical as well. And majority of people, not the majority, but a lot of people who trade, they don't care about fundamental valuation. They evaluate it based on technical and they say, okay, it's support, so I'm buying it, right? Value investors like Warren Buffett, they wouldn't do that. So first of all, they have to pay attention to fundamental valuation. To find exact point to buy it, sometimes it's possible. Yes, technical analysts, they're trying to do it. But if you talk to different technical analysts, so they will tell you different entry points. And that's why the stock market is so beautiful, because there are so many different opinions there. And that's helps you to make money or lose money for some people, right? In this particular case. It's like, for example, I opened few positions on Friday because I thought that the market was at support. And it actually was bouncing already in the beginning of the session. I don't know if you guys stayed late, but I stayed probably until 2 o'clock in the morning in Australian time. And I could see the market was dropping, opening up higher. And I placed my orders because I was pretty happy. And the position which I was placing as well, they were going up, right? And the next thing, when I woke up, freaking hell, it's dropped down already. Okay, so it went against, and on Monday it's collapsed. And you know, it's like, it's frustrating, but because I'm confident with my companies, I know that I chose them from like 30,000 companies in the market, and I did a thorough research on them. I understand, yes, they can drop in price more. It's nothing I can do about that. All right, but I am confident with those businesses that they're going to continue operate and they're going to survive, and the price will recover. This what makes me sleep well at night. All right, so that's why I don't that much. Well, of course, I upset sometimes when the price drop and you can see $10,000 drop in the portfolio value, but next day when I see the $10,000 up, it's kind of gives it back, right? Satisfaction. All right, so let's have a look what kind of results did I come to. So quality is 4. It gave 43 points. Now, where did we lose? 1 point we lost on industry. Then timeliness, because it's 3, like average. Then we lost on debt. It's a bit higher than 10%, right? Then with growth trend, because growth trend, we are trying to find best companies which have 15% plus growth. And this company has less than, like, projected. Again, they might grow more, but at the moment the projection is only 6 and 7.5% growth rate for sales and earnings. Right. So, and the rest of it's still fantastic. Based on what's happening in the market right now, I presume it's a pretty good company. Now, if we look at the price analysis, it's also got what 43 points. And where did we lose? We lost estimated price appreciation. Okay, it's not 15+%, it's 12% on the higher scale. And then we look at also, and the rest of it is perfect. So that's the only one place where we lost. Another thing which you have to consider is tangible book value negative. It's -25. The next earnings would be 26 of 10. I just want guys to remind how we came up to this number. So I looked to those numbers. So we looked at the highest points. It was 269, 323, right? So 400, 440. And this is 359 average price. 5-year lows average 242, and earnings $17, right? And last year earnings now was $24, and that's how we do it. I look at the last earnings and multiply by the lower P ratio, okay, average low, and come up to 331. At the moment, the price 338, so just $7 above this lowest price. And if everything is rosy and good and people are going to pay 20 times their earnings and the company achieves what they promise in $33 in earnings and in net profit, so it's going to be 667. So this is the area price range where the company can be within the next 3 to 5 years. All right. At the moment, we're closer to the bottom part. So hopefully it will happen that company goes all the way up. So we break it to 3 areas. First area until 440 is where we buy, then until 550 where we hold, and after 550 we already consider to sell because it becomes overvalued. Okay, if of course nothing changes fundamentally with that particular company. All right, that's how we calculate. And another thing which I already mentioned, look, you see the green dot, it's actual earnings. We can see they're always at the higher end. So probably Lockheed is a company which under-promise and over-deliver. For whatever reason, the next earnings, they're very, very widespread here. Most likely they took off projections or maybe estimates. Has some glitch in it, and that's why there is no information here, right, about it. But another thing which is quite significant, sustainable growth. There is no seasonality in this particular product, so which is pretty good. Now, from ownership perspective, 75% is owned by institutions. So it means that, and one of the pretty big groups, Vanguard, State Street Corp, BlackRock, and Wellington, right, Bank of America, Charles Schwab's. So one of the biggest institutions that own those companies, and usually they buy like sustainable and stable companies, right? All right. So from fundamental point of view, guys, put from 0 to 10 how like clear this company is now, and then we'll go for technical analysis. Okay, fantastic. Now, company was established by merger in 1995. Okay, that's what we growth see. So right now, if we look at these drops, they look really, really small. But in reality, it's nearly 50% drop. Okay, because that was the price around $70, 65, and this is the price was less than 18, probably something like that drop. Also thin in 2008, here the price was close to 120. This is the price around 60. So, and we just saw that the earnings didn't go lower than 10%. So they didn't reduce the earnings quite a lot, but the price still halved. So that's why when you see the price goes down, it's not like it is unpleasant thing, but it's not the complete bad thing for your investment, because investment can go up and down the valuation. The more important the value of this company. So if the company keeps going and improving themselves, so it's actually a very, very good thing about it, right? So, and we can see that in 2012, it took a couple of years, remember, in order to go back to the same previous earnings. And after that, the share price, you can see it's like up, practically never goes down, right? Until 2018, 17. Okay, it's actually probably 2016. Donald Trump was elected, right? And sometimes during that time, and then the volatility started after that. 2019, probably close already to new election, right? So the highest point was $440. Lowest point within the last 2 years, it was $267. So this is prior to pandemic. This is just after the pandemic started. Okay, so it's quite a huge drop. So people were fearful about this industry, and after that, it's recovered really, really quickly. Look how quick it went up. Okay, and then it can be said sideways trend, because look, this level in October 2019, around $400. This is close to $400. This is $400. This is $400. This is $400, and broke through this $400. So it's like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 times, right? It's actually bounced down from those levels, around 400. So I presume that when the company recovers and goes all the way up, pay attention to that level. It could be a strong like sell point. Okay, so where people, at least if it breaks through, after that it will be a good jump. Okay, and I'm sure Mick will enjoy that particular strategy on that breakthrough. All right, and we can see that the couple rows, it's already 1 roll, 2 roll, and this is the 3rd roll. It's a bit slightly downtrend, because the highest point here was around 419, right? So then it's dropped down around 400, a bit less, 396. And also we can see, so it's high points, they go lower, and low points, they also go low. We can see this point was around 340, and this one was around 320. Okay, so that's why I draw this kind of very long, nearly 1-year trend, which is a bit slightly down. And at the moment, we can see the company is going down, down, down. If I show this smaller trend, you can see on earnings, it dropped down. On dividends, it's dropped down. And last night, it's also dropped down. So we can see it's still falling. Okay, where it's going to stop, we can only guess, right? We can see it's kind of support here. 1, 2, 3, 4 times. It's kind of bounced from this level, but once it broke through, okay, and it was in March this year, all right, so it's already during this year. And so guys, that's where we had a masterclass in March, and after that it went all the way up. So what would be your projections? Okay, indicators we can see in oversold situation, they're not turning yet, so they don't show the curve of entry position yet, so but they're already in oversold situation. So we have to definitely keep an eye on this particular, like in my opinion, on this particular share. And when we see it's going to turn around, start moving up, probably we can enter it. If you go back to technical analysis, what was happening, it's actually when it drops, it's doesn't consolidate that often. So look at this, instantly move up, drop, move up, drop, move up, right? Drop, move up. So it doesn't spend a lot of time at the bottom. So that's why if some of you wants to like invest in this particular company, so definitely be kind of pay attention to that, because if it drops and you miss that opportunity, when it starts recovering, it can recover pretty quickly. Okay, so in this particular case. So anyway, my question is always, where do you think the entry point is going to be? Let's put a crystal ball on your table and think, where do you think, if you're going to enter, even for a long term, as a long-term investor, if you like this company, definitely, where would you buy it and where would you sell it? Okay, max 320, 325. So that's this is the level, right? So definitely it's going to be a support because it's the lowest point. Okay, Mick not planning to trade it. 322 Sergey to 390. Okay, 322, 390. All right, so it's all good. Okay, perfect. Yeah, all right. So let's see what I come up with. Michal 322, 99, or very precise. 332.93. Okay, entry. All right, so I put it around 322, 332 entry, but again, it's based on the market, because if market now start dropping down, so we might see the drop even more there. So, and it would be one better entry point. Okay, and then to hold based on fundamental analysis 440 to 550, based on technical analysis, I would definitely go into exit somewhere around 400, or at least be ready. So if it starts going down, so I probably will exit from that position. If it breaks through, then I will let it ride until 450 and enjoy it. Now, possible waiting period 2 to 3 years. Okay, 70% profits on that particular case. Now, if you do roll strategy, if you go back to their rolls, they are roughly about 5%. But again, it's because it's so quickly, it doesn't consolidate. And when it like trade on rolls, it's not easy to catch the companies like that, because one day it's going down, the red candle, big candle, and the next day it's already green candle. And if you sleep through that night, so you already won't catch it. So, but if you try to catch falling knife, it's never a good thing. So that's why with this particular company, it's better to play the long game, right? So to buy and then to wait a few months and then to sell it by making like 50 or 30% profit, right? In this particular. Okay, let's have a look at option strategies. Can we make money with options here? Now, they have quickly options, which is good. Also, they have $5 strike difference in strike prices, which is good for that particular size of the company, right? So let's have a look at different opportunities. We can sell options or we can buy options. So I'm going to pay attention only to selling puts, because it would be exactly the same profitability as selling calls. Now remember that because the share price is quite expensive, in order to buy one lot of 100 shares, you have to have, say, $33,853. All right, so just be aware of it. So if you're selling put, so you have to allocate that amount of money in case if you just like have to follow the obligation and buy. Now, if you don't have that cash, that amount of cash, so what you can do, first of all, we can swap and buy options. We're going to look at this just in a minute, or you can start selling spreads or buying spreads. Okay, think about it as well. So don't disregard the opportunity because you don't have that amount of cash. So there are certain other strategies with options. But anyway, so let's have a look. So if we decide to sell practically at the money put, we're going to get $2.3, maybe a bit more, okay, because it's spread from 2.3 to 2.6. So the last trade was around $2.4. And so we can get for 335 strike price. So it's a bit below the current level. Now, how much is that, guys? It's around 6.5, 6.7%, right? Or it was 0.6%. So it's less than 1%. Okay, but it's only for 3 days, 4 days, like today, Wednesday, Thursday, and Friday, right? Now, if we go until 1st of October for the same price, strike price, we get 392, probably a bit more again, because look at this, the gap is between 3.7 and $5, quite a big spread, which is not favorable, right? So it's here as well, nearly $2. So, but if you get around maybe $4.5, who knows, maybe because here nearly $4. So it gives you about 1.2% profitability of puts for 1 week. So which is not that bad. Okay, so it's if you trade for 1 week. Remember that the earnings coming up in the end of October, 26th of October. And if we go for a longer period of time, I'm not going to go through each one of them, but if we go for exactly 1 month until 22nd of October, for 335 strike price, we get close to $8. Okay, which is a bit less than 3%, 2.5%. When you look at this particular profitability, I don't like it. Okay, so for me, it's too little, 2.5% for 4 months period of time. Okay, I'd rather trade shares in this particular case or use other strategy in this case. Or most likely what I do, I would sell shorter period of puts. Now, again, I just want to repeat, guys, that at the moment it's not the time. The only reason why I'm showing you this option premiums, because when the share price drops and you can see this bottom where the support, where they start turning around, there would be about the same profitability if something doesn't change significantly, right? So that's what you can expect from this company. And that's how you analyze it. So if it's already down, that's what you're going to do in order to find the best deal for you. Now let's have a look at buying leaps. Okay, so what we do if we, instead of selling puts, we buy leap. Instead of buying shares, we buy leap calls. Now I put only 3 like expiration dates, but if you go to the broker, so there would be more of them. In 2022 would be more of them, and also there is one in 2024. So you can actually buy leap for nearly 2.5 years, right? So which is pretty long time. So let's have a look how much we're going to pay. Now for, again, I'm going to be above the price in order just to see the time value. And the main reason why I do that, just to estimate how expensive is that particular call option is, right? So 340 strike price. So it's all pure time value. For this January, I mean coming January, it's $16.5. So how much is that? It's 5% for 4 months, right? So you pay 5% for this particular stock, and you secure the price of $340. So if during that period of time the share price increases, so you're going to profit. If it stays below that level, so you're going to lose the $16. Now let's have a look until June. So it would be already 9 months. 9 months here, it's $26. Again, the spread is quite big, $6. The last trading was at $23. So let's assume that you can negotiate and get $23 as well. So how much is that? It's around what, 6%, right? So that's what you're going to pay it. And if we go for $340, but until January 2023, so it's 1 year and 4 months, we're going to pay, the last trade was $31, so it's around 9%. So the question, guys, do you think options here, like leap options, are expensive or cheap? What's your opinion? What do you think, based on the size of the and the price of the stock? Yeah, so it is pretty cheap options. Of course, one of the factors which influence that, because the share price is dropping right now, so people are not willing to buy options, call options, and that's why probably they're a bit undervalued. So when we see that it drops to the level, start growing, the volatility of those options, expectation implied volatility will grow up as well. So people expect it to grow, they start buy it, so of course the price time value will go up as well. Okay, this is always happens like that. But definitely when you consider, like, I mean, assuming like theoretically, if you were choosing buying shares, selling put options, or buying call options, what would you do in this particular situation? If you assuming that we're already at support and we can see it's turning around, so what would you do? So out of these 3 options, selling puts for 1 week, for 4 weeks, buying leaps for 4 months, 9 months, or like what, 16 months, or buying shares, what would be your opinion? Because the major reason for master classes like that is just to try to learn how to make decisions, because some of you are already professional traders. I mean, professionals in the sense that you already trade quite a lot, but some still kind of every time when you're making a decision, you kind of not sure what to do, right? In this particular case. Okay, Sergey, so put for 1 week. All right, great. Any other options? Who is that? Michal, what would you do? Jeremy? Okay, am I buy a leap? All right, because if you buy a leap, you only put in, if you buy for, let's say, until January 2023, right? So you're going to pay only $3,000. I mean, only, right? So instead of paying $30,000, or 30,000 or 34,000, you're going to pay only $3,000. And just if you try on to see how much you can make money, so if the share price goes to $400, right? The time value is going to be, some of it is going to be lost, but still it would be at least an intrinsic value of $60 plus something in time value, assuming like at least $10, right? So you're going to sell for 70. So you can make more than 100% profit, right, on that particular case. Okay, Michal, buy shares. If I had to buy shares is less probably risky in this particular case. Yeah, sell puts as well, less risky, because if you sell for 1 week and then you buy shares, you just hold the shares. Okay, but if you buy shares, you get dividends 3%, and also it has appreciation potential of like nearly 70%. All right, guys, this is all about this company. If you have any questions, please ask. If you can put from 0 to 10 how you like this company. Curious to see it. If you have any other ideas about where to put money or what to do with the market, you can also put. And while you're doing it, while you're putting all this, I tell a couple of news what we're planning to do. So we're going to have weekly trade preparation next week. But I'm going to do it not on Mondays or Tuesdays usually, but I'm going to do it on Thursday because I have a couple already arrangements early in the week. So it's exactly the same. We just sit down and we just discuss. I look through my list of companies and we'll try to find the deals for that particular day or next following week. Okay, so it's going to be 30th of September at 3 p.m. Sydney time. Now, I cannot do it earlier. And so because part of Russian group as well, so coming there, maybe in the future I will change it somehow, or maybe we'll do it later, but all my units usually busy on Thursday and Wednesday, so that's why I couldn't do it. Now, also guys, what I wanted to tell you that we discussed with few of like in our group with Max and Dan and other investors. And we are going to pursue the opportunity which we already discussed. It's joining together and buying different projects together. So investing kind of as a group, right? And we're going to create this investment club. That investment club is going to be informational, just pure for those people who want to do that. Okay, in order not to spam those who invest in the stock market. So we're going to have a separate group which is going to be investing in different property projects. For example, we still deal with Kingdom Development, which we showed you 2 years ago. And they already completed altogether 22 projects. At the moment, 26 projects ongoing. In a total value is about $500 million. Different projects. The entry point, individual entry point for each project varies from $40,000 up to $500,000. Depends on the size of the project. And the way it goes usually, so if we like find the project and the like initial investment requires for say $6 million. So what happens that the price is broken into 100 shares, right? So it means that every share is going to be $60. So, and that's how you can enter to that particular project. So if some of you are interested to see at least what kind of projects are available, you can email me or let me know. I will email you the project status report with all these ongoing projects. Some of them they're already like fully complete, like I mean filled, so it's impossible to invest in those. But some of them just completely new, so they just in recent months started. So there is still allocation available there, so you can buy into that particular company. It's one thing. Secondly, some of investors in like my friends who like planning to invest in these projects, they couldn't put all the amount, so they couldn't put $150,000 to buy one share or $40,000 to buy one share. So, and the idea was created to set separate company. And so, for example, if we need $150,000, so we can come up 10 people by putting $15,000, and we buy the kind of department that particular company. Also, there is a completely new project, for example, right now. So where we not only just develop something and sell. At the moment, we're looking at buying a land and develop it for the golf course, and after that to rent it out to the company which runs golf courses. And the estimated projection profit, it's about 20% on the rental income from that particular thing. So, which is fantastic. But the entry point is $500,000, all right? So I don't have $500,000 to put in this particular project, but I'm thinking, why not to create a group where we can have, let's say, 25 people by $20,000 or 20 people by $25,000. Of course, there would be some ongoing fees there because we have to run the company, kind of manage this company, meet investors, so all this kind of stuff. So it can be management fee, but still, it could be a great opportunity to enter. All right, so something like that. Also, Max came up with a very good contacts about buying the land and these quick opportunities, because the land is going in the price so quickly that at the moment is a kind of lack of land. And so if we see the good opportunity to buy and secure the price of the land, so we also want to be in a position where we can quickly raise some money to secure the lot, and then already to find the proper buyer later on and sell it with a profit. Okay, so this is one of the opportunities. And also the commercial property, because the interesting situation happens now that the residential property, especially houses, they grow in prices, but the commercial property, because of COVID, they dropped quite a lot. So, and the idea is not only just pure buy a commercial property and then not to know what to do with this, but actually to buy a commercial property prepared for the certain business, to set it for the certain business, and then to sell it as a concern or like a business concern rather than a just empty shell. Okay, and first of all, the rent is much higher, but secondly, it's much easier to find the client, because some of, like, let's purely assume that you want to rent a shop to hairdresser, right? A lot of people would love to have their own salon, but they cannot do it because they have to buy chairs, they have to buy all this equipment. And it's not that huge amount of money. It's maybe $30,000 to $40,000 altogether. But a lot of hairdressers, they don't have it. So, but if you prepare it for them, if you set it everything, so if you compare the whole price of the that particular commercial property, this extra $30,000, it wouldn't be that a huge investment, but then you rent it as an ongoing concern with all these chairs and all these mirrors and everything. So there would be much more people willing to pay you money for this rent. So, and there are different opportunities to do something like that as well. And also, we're going to get back to buying businesses, because we already, with Max Lasov, we discussed and we already negotiated a deal before the COVID, but when we put it on hold, and luckily enough, we put it on hold because the COVID hit us, but still we're going to pursue this opportunity, and we're going to look at this area as well, because after COVID, there would be quite a lot of businesses on sale, and the prices would be really, really favorable. Okay, maybe P ratio 3, 4. We can buy businesses with very solid like track record. So guys, if you are happy to do that, just email me or text me, let me know that you're interested. I will put you into that kind of separate group, and I will inform you about future upcoming opportunities, investment opportunities not related already to the stock market. All right, guys. And another thing which is for Russian speaking community, just want to tell you that in Russia we're launching absolutely new program. It would be a lot of material recorded, but then weekly meeting Q&A session. and it would be more based on fundamental analysis of the companies, okay, and it will start in the beginning of October, right? And we're going to have master class, which is going to be 29th of September, 10 a.m. Moscow time, so it would be 5 p.m. Sydney time, right, where we're going to talk about step-by-step system of investing. It's just like how you have to allocate the first step, second step, third step, because I still see a lot of investors, they kind of a bit confused, they don't know which process to follow. All right, some of you already experts, but if you know somebody from Russian community who would be interested in that, so definitely share this with them. Now also, because it's going to be like a promo masterclass, we're going to give some bonuses, vouchers for most active participants. It would be like 10,000 rubles, 5,000 rubles, and 3,000 rubles, which is equal around maybe 200 Australian dollars, 100 and about 70 dollars, Australian dollars, just for participating and answering questions and etc. etc. So also for that particular project, for that particular program, so if you already have done value investing and you want to repeat it, so which we're going just to give you access at like one condition. So one condition is if you extend the membership in the club like in Russia, but because you guys in Australia, so it's not that interesting. Or alternative is to pay only 5% of the cost of that particular program, and so which is about $100 only, right? And it just covers the cost of my like assistance, which you're going to support during that program. So it's just covering that, and you're going to get access to all this value investing program. You're going to have like all these weekly sessions and all updated information and material. But it's only for those people who've done value investing. So it's not for new students. It's just for repeat kind of, if you want just to renew and update the information about it. It's again for the Russian investment community, and the education starts in October. All right, and in November we'll start an option trading course again in Russian language in November. All right, guys, this is okay. So I see questions again. All right, okay, Sergey. Okay, cool. So I'll send you information about this, Sergey, and you will see it. All right, guys, do you have any questions more? If everything is good, from 0 to 10, how you like the masterclass, and enjoy your profit, right? So enjoy the market volatility. Okay, so okay. Bye-bye.
Thank you, Igor.
Okay, all the best.
Okay.
Yeah.
Okay, just me. I'm just curious if you are able to have a look at that company, but I'm not sure where to get the profit and loss and balance sheet. I can try to ask them.
I presume if they're publicly traded company, they have to have it on the website. But definitely, if you can, if they don't have anywhere their profit and loss statement, definitely if you send it to me, it would be much easier for me rather than try to find it myself. I just was quite busy with the last couple of weeks, so I had this. I still have your email, and every day I see it, and I think I have to devote the time I do it, but I did not look at this yet.
Right. Okay. Thank you. Thank you very much.
All the best.
Yep. All the best. Bye-bye.